Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market, that is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today, we have Chatbot and Chill by Xcopy selling for a cool $1.9 million. The buyer must have listened to our interview with Han with the latest Xcopy work on Tuesday. Number 2, Stripe now accepts stablecoin payments on Solana. We'll give you some of the information there. Very important news. And VanEck announces a $30 million early stage fund for the intersection of fintech, crypto, and AI. Looking forward to discuss that in just a little bit too. We've also got the latest on price action on crypto and NFTs as usual, and a discussion on the value accruing to applications which are starting to flip their underlying infrastructure. Very important discussion when it comes to the funding side of things. We'll be discussing why that is significant for capital allocators, so stay tuned for that. Today, we've got Legendary in the co-host seat. We're ready to get into it, but just a reminder that nothing that we say here is financial advice, because we don't know anything for sure, unfortunately. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Thursday, the 10th of October. How are you doing?
GM doing pretty well. 361 shows in. And I think we developed that kind of sixth sense when we know what the headlines are. We also know which people will be up on stage to speak on them. And today was one of those days where we have the Stripe stablecoin acceptance. We have the VanEck fund story, both that you just mentioned. And I know that Matthew is going to be on stage with us because that's something he definitely wants to speak to.
Yeah, I love it. I actually just saw him arrive on stage as well. I don't know if he'd read the snapshot already, knowing that that was going to be there, but I thought, yes, that will be a good person to be with us to speak to some of that stuff on the fund side of things. So great to have him and Funky with us on stage as well. We'll get into everything as usual in just a little bit. Before we get there, Legendary, how are you doing otherwise? Everything well on your side of things?
Yeah, everything well. I've been thinking a bit, maybe also on the back of the Publish and Profit segment that we did yesterday, on content creation and on like some of the niches that I find interesting. And the thing that I'm lacking right now is like good content on stablecoins. And we've been like multiple times on the show and off the show talking about like how the stablecoin market cap keeps increasing, and how I kind of would like to have a share of that more than just obviously yield farming and moving the capital around. And I've been thinking content wise to kind of come up with something that is starting to cover stablecoins a bit more in depth, because it's information that I'm lacking myself and that I would quite like to have.
I like it. I actually think there's space in the space for a stablecoin guy, like the person that everyone knows, like, oh, I want to hold some stablecoins, but I don't want boring USDC or like vanilla USDT. I want like a mint choc chip stablecoin instead, you know, with different flavors of stablecoin. And someone needs to be able to explain it. Is that what you're thinking?
Yeah, I mean, that was a big thinking of that. Obviously, some of the stats and some of like the more descriptive data. But also, really, there's no stablecoin that like tries to be cool. There's no stablecoin that like tries to be culturally more interesting than others. And there is features that would make stablecoins cool. And I would probably say PRUSD would come closer to that with the integration they had on Camino Finance and some of the other things they did on Solana. But like making stablecoins cool, can't even say again because they've never been cool, would be interesting.
I mean, it's an interesting idea. I do think there'll be, we've said this many times, there'll be loads of different types of stable coins and you'll be able to choose your mix. So I genuinely think, like ice cream, you'll be able to go as exotic as you like. However, I don't know if they can be cool. But if there is a space where that's possible, say you have these kind of rabid communities like Bearer Chain, thinking of Bearer Coin, obviously there's going to be a Bearer token, I suspect, but whether they could have like a Bear stable coin instead, and people rally around that, right? Because you've got, in the end, it's just about people rallying towards your coin.
Yeah.
So yeah, interesting.
Talking about cool things, one cool statistic I read about Tether, and they are now one of the largest US Treasury holders in the world. They are holding more US Treasuries than Germany. I think Germany is in the top 30 list of countries who are holding US Treasuries. And if Tether were a country, they would be number 29, holding more US treasuries than even Germany, which is quite insane to think about.
Absolutely crazy. Huge profits have been created by the stablecoin business model, but I do think it's going to get disrupted. So glad we're talking about that, and that will actually be a part of one of our segments today. New segment called Legendary DeFi. Legendary is way too sophisticated in some of his DeFi moves for us to keep that knowledge. So we wanted to share some of that on a more routine basis. So we're going to get into that in a little bit. Let's get to the usual price action and headlines first, get you up to speed with that first. Starting with the price action, things are just a touch down, to be honest. Bitcoin's down almost 2%, ETH down a 1.5% to 2.4K. Bitcoin, sorry, was at 61K. Solana at $139, down a few percent as well. On the meme side of things, everything is also down. WIF's down 7% to $2.30. Pepe's down 3%. Popcat is flat at $1.20. Mog down 11%. SPX, the Murad favorite coin, down 1%. Mog is also down 11%. So a bit more significant moves down on the memes. Giga is also down 10. So that's kind of pulled back a little bit. They have obviously gone on a crazy run in the last 7 days. SPX is still up 186% on the week. Mog is up a few percent on the week. Muse up 20% on the week. Popcat's up 20% on the week. So it's not like these things are struggling, but they are pulling back just a touch. In terms of the headlines themselves, Chatbot and Chill by Xcopy sells for 800 ETH. That's $1.9 million highest price paid for Xcopy since December 2021. Got some interesting statistics there to share behind the scenes of who the collector was, why they're collecting. We'll do that in a little bit. Next, Stripe now accepts stablecoin payments on Solana with customers from 70 plus countries doing so in the first 24 hours. So this is now expanded. So if you're a US merchant on Stripe, you can check your Stripe dashboard and turn on pay with crypto. That's pretty cool. And then finally, very interested in this one, VanEck announces $30 million early stage fund for the intersection of fintech, crypto, and AI. We'll dive into that in a little bit too. Some notable sales: CryptoPunk Clown Police Out selling for 35 ETH, Tyler Hobbs Fidenza selling for 30.5 ETH as well. Legendary, that's the price action and the headlines. Do you want to head over so we can check out what's going on in the NFT side of things?
Absolutely. Let's take a look at the JPEG Major. Sport Apes up 1.4% over the last 24 hours, 11.15 ETH floor for them. Pudgies are down another percent, 9.4 ETH floor for them, down 6% over the last 7 days, getting further and further away from the 10 ETH floor they managed to hold so well for the last weeks and months. Azukis are having another day where they're acting as a stable coin, sitting at 5.18 ETH, basically also unchanged over the entire week, down 0.34%. There is a bit of volume going on in that collection, a fair amount of volume, but nobody's really dumping it, which is quite interesting to see. Milady is unchanged from yesterday, 3.4 ETH floor for them, but still important to keep in mind that they're up 20% over the last 7 days, definitely profiting from the green wave we've seen running through the meme NFTs. Talking about meme NFTs, also wanted to check in on Project Ian, which is one of the NFTs on Murad's list, because it had massive run, just to see how it has been doing. Over the last 24 hours, it's down 17%, 1.45 ETH floor. However, obviously still up 230% over the last 7 days.
Interesting. Excellent summary. Thanks very much, Legendary. Maybe a personal question before we get into the rest of the stuff today. You said recently that you thought, look, there's just too much stuff going on in some of this stuff, too much activity. You thought you wanted to maybe play around with it a little bit more, get involved in some of the meme side of things. What have you been doing? How have you been allocating your attention and capital, if at all?
I increased my balance in Photon. I mean, I used Photon back a couple months ago, but I haven't been the most like sophisticated trader on it, and I just started to read a bit more on the stats to get an understanding of holders, of patterns of holders, how they're moving, how they're increasing. Increase the basically the capital share there and start to play around a bit more with it, but not following like a sophisticated strategy or anything. It's just a bit more of an exploratory phase, if anything at all.
Okay. Fair enough. From my perspective, what have I been doing? Yeah, not a lot. not a lot on the meme side of things. Pretty much missed the majority of these moves in particular. No, I did buy some Pepe, didn't I? I bought some Pepe quite recently because I thought that would be good. And did I buy another one? I don't think so. I think it was just that. But yeah, with very, very small portions, because I broadly subscribe to the idea that, like, look, you got to focus on your unfair advantage. I wrote that post the other day, like trying to share my thinking when it comes to maybe bigger scale investments. It's just like, well, how can I make sure I continue to participate in something where I have an edge? And when it comes to jumping into the next meme coin or swing trading the meme coins, I definitely don't feel like I have a specific edge on anyone else. Whereas on the investment side of things, with the way that certain investment deals are kind of being structured now, it feels like you can get a pretty good deal. Now, remember, maybe earlier on in the year, that was very, very bad, and it flipped really bad for investors. Feels kind of healthy again at the moment. So every single investment that you make, I guess, is competing with all the other potential investments that you can make as well. So that's, I guess, something to bear in mind. Any reflections on that before we keep it moving?
Nothing of substance to add to that. Definitely agree with what you have been saying.
Okay. Interesting. Right. Let's get into this article, which I think is super interesting. This has been catching my attention. There's been a big conversation in crypto recently about the over investment in infrastructure. People are getting quite tired of seeing more L1s or L2s continuously being kind of spun up and being invested in, and they come out at huge valuations, and all of the people who are in early, as early investors start selling, and then the price just goes down, and there doesn't seem to be a huge reason for why people want to hold these things, and there doesn't seem to be a huge impulse, doesn't seem to be a huge justification for these things being so expensive when the usage doesn't actually appear to be that high. And I think that's one of the core issues with that whole environment as things stand. Now, this article, which is written by Ryan Watkins, who is an analyst who I think is runs their own fund as well now, comes highly recommended from some other prominent investors on the timeline as well. That's how I came across him. I think their fund's called Syncrasy. And he wrote this article called Applications Capture Fees, Blockchains, Store Values. And it's kind of suggesting that, contrary to popular belief, the age of applications is actually here right now. Because yes, it might have been the case that all that investment was going into infrastructure before. And that's the thing which people were getting most excited about. And that's the thing was potentially the most valuable. But actually what you're seeing on the ground, and in that period of time, applications were kind of being ignored and it was difficult to get funded. What you're seeing now is that many applications are actually already out earning infrastructure. So leading platforms like ETH and Solana are home to plenty of applications generating 8 to 9 figures in revenue and growing at triple-digit percentages annually. However, despite these impressive figures, applications continue to trade at a substantial discount to infrastructure. So their valuations are just not reflecting how successful they are being financially. On average, they trade at around 300x higher revenue multiples. That's infrastructure. While infrastructure assets that sit at the center of smart contract ecosystems like ETH and Sol may retain a store value premium, non-monetary infrastructure assets such as L2 tokens will likely see their multiples compress over the time. And the thesis of this article is that they believe that the market is yet to fully recognize this reality. And so leading applications should really reprice much higher as capital flows out of non-monetary infrastructure. And I guess that kind of reflects how things operate in the real world of applications, where, yes, of course, the platform on top of which an application sits is very, very valuable. However, Facebook as the application which sits on top of the infra is way more valuable than everything else, because that's where all the people are and that's where all the majority of the value is captured. And in part, that's what this article is kind of suggesting, that we haven't really come to terms with that yet. So I've got this chart. Remember, I'm showing this on screen as well. We're live on X video, live on YouTube video as well. Just going to try and zoom in a bit so we can show these applications that are out earning most infrastructure. Of course, ETH This is a chart, I think, from the end of September, but the article was only published 2 days ago. So this is a fresh analysis. ETH earning a very healthy amount, earning the most at 961 million. That's revenue calculated using the last 90 days. In that same time period, Solana had made 749, so they're second. Tron, our favorite Tron, where people never kind of really know where the money's coming from, but that is third at almost 600 million. So very, very real use case there, earning fees. But straight after that, you have applications. So you have Maker earning 261 million. Actually, the highest earning application right now is Pump.fund. And we've reported on that a while ago, right? We have spoken about how Pump was out earning in certain periods of time, out earning ETH itself and out earning Solana itself. So huge amounts of being made there. Aerodrome on base is also there. Then comes BNB, so back to the infra. Then Athena, doing 112 million. I did not realize that was so high in terms of the fees that they were generating. Then Lido, Jupiter, Aave, Radium, and Cake. So all applications are next. Then you get to Telegram. And interestingly, with Telegram is like what, the number 7 coin or something? When you look at the top 100 coins, it's something like the 7th coin.
Number
But
11, actually. It's down
okay.
from the top spot.
Sure. So it's dropped down a little bit, but the point is there are a bunch of applications here that are making significantly more money, or either a little bit more money or significantly more money, but might not be priced in that same way. So for example, Athena, which is earning almost 3 times the amount, is way down the list at the moment. I know it's still a healthy valuation, but it's way down the list in comparison. So I thought that was very, very interesting to see. Maybe a few more interesting points made in the article is that they think that the trend will likely only accelerate as applications push to capture a greater share of their economics and verticalize in an effort to better control their user experience. And then they say that this is kind of already happening, or that you have people already trying to build their own move their stuff into their own rollups. So applications like Uniswap, Aave, and Maker, they're apparently actively developing their own rollups as we speak. These applications are seeking more than just scalability. They're pushing for features such as custom execution environments, alternative economic models. Basically, by pursuing those options, these applications are not only enhancing the user value, but they're also reducing their operational costs. And crucially, they gain a larger share of economic control relative to their base layer infrastructure. So it feels like we're moving towards a situation where these teams want more control. They now don't need to exist primarily on mainnet in the way they would have done before, and then they can capture more of the value potentially. So the final conclusion I'll leave you with is that in Syncracy's view, while applications will continue to capture a greater share of the global blockchain fee pool over time, underlying infrastructure may still generate larger outcomes, albeit for a smaller number of players. And the reason why they think this is long-term, all base layer assets like Bitcoin, ETH, and Sol will compete as non-sovereign digital store of value, which is ultimately the largest TAM in the crypto economy. So I think that's super interesting. I think it's definitely worth thinking about this distinction between applications and infrastructure, and how we might see much more attention and capital flow to applications as a consequence. That's my little summary of this article. I'd recommend reading it. You can probably get to it from the snapshot, which is pinned up top if you go through to Ryan's profile. But Legendary, those are my kind of headline takeaways from this. What are your thoughts on it?
Look, if we go with Ethereum and the analogy that we have used in the show quite a few times, that it's kind of the app store of the blockchain, it's a decentralized app store, then we suddenly see that something very similar is happening both in Web 2 and in Web 3. We have the Epic Games app store winning against the Play Store in Google, winning against Google, and basically being allowed to offer the same range of apps, the same set of apps as the Play Store. There's also been the ruling in the EU quite a while ago that alternative app stores have to be enabled. Apple had to do the same thing in a lot of third-party app stores, which is kind of the equivalent of basically a protocol like Aave or others building their own roll-up to be like, look, we don't necessarily need to do everything via the underlying infrastructure layer. And that's interesting to see both those developments happening in Web 2 and in Web 3 at the same time. And the way I start to think more about infrastructure, whether that's Ethereum or other infrastructure projects, is to kind of see them as an ETF. So obviously you won't have the massively successful applications and the valuations and the earnings that apps like Pump.Fun make. But you kind of have an ETF of all the things that are happening on that, and you're participating in that. And if the business model of the underlying infrastructure is solid, which kind of remains a bit questionable at the moment with L1s, with Ethereum as an L1, because obviously it's not profiting that much from what is happening on the L2 side of things. But if that underlying business model is a very good one and allows to basically distribute capital to successful apps, but also profit enough financially from that, then it kind of becomes like a nice ETF style of bet, which I like to look at.
An ETF in what sense? Just clarify that for me.
Basically, if you don't need to bet on the most successful application on Solana and identify that, you just bet on Solana because you think it's a good place for successful applications to being built, and you will profit from both the pump.funds, but also will obviously have underperforming quote unquote assets, projects, protocols in there. And it's a more diversified bet than trying to identify the most successful thing yourself and trying to participate in that.
Yeah, I like it. So yeah, I think there is a distinction between maybe the ones which have emerged already, which are the ones that the apps are sitting on top of, versus the complete proliferation and the extensive extension of the infrastructure, whether it's via L2s or other style of things, where I think people are wondering if it's less obvious how all of those things can have value accrue to them. So yeah, to be clear, I don't think the article is arguing for the core L1s being less valuable. Maybe just that we see some more value drive into the successful applications and the funding of new applications. I think this is a question about funding as well, right? I've seen multiple people complain that with cool ideas and applications, they're unable to secure the funding because it's become too habitual for VCs to know that if they just enter an infrastructure round at $300 million FDV, they will definitely be over $1 billion by the time that they are ready to sell their tokens. And it's just it's a deal that you can't not take, right? Like if your mandate is to be profitable in crypto venture, you're going to take that deal because it's better than anything else that's on the market. And why go more high risk? But I can see a future where this might shift when you're seeing genuine protocols being right up there in terms of fee generation. So lovely discussion. I've enjoyed bringing that to the audience. I think that's a very important thing to be thinking about as you move forward, as some of these applications are becoming more and more successful. On this maybe slightly more technical side, I'm really excited today to hit our first segment of legendary DeFi. I know this is something people have asked for, people have spoken about when it comes to whether it's treasury management, money management, just like being a bit more sophisticated on chain, how to allocate capital in like relatively risk-off ways, but also trying to understand the risks at the same time. That's what we're going to be trying to do in this segment. This is the first of hopefully many to come. Legendary. Let's go. First legendary DeFi.
Absolutely. Thank you for the intro. This is, as you said, our weekly segment, Legendary DeFi. And the goal is to break down some of the most interesting opportunities in the world of decentralized finance. This segment is brought to you by Swipe. Swipe is the Tinder of prediction markets. Swipe left or right on the Telegram app to bet across crypto, major events, politics, sports, and more. And today, I want to take a look at Go, the Aave stablecoin, and how you can currently earn around 15% yield as a staker, but also touch on some of the risks. So first of all, it's important to understand that Go is a relatively new stablecoin. It launched last July 2023 by Aave. Aave, again, leading money market protocol in Ethereum, which is fully governed by the Aave DAO, which is going to be important in that segment. So just keep that in mind for a bit. What is Go? How does it work exactly? It's a native, decentralized, collateral-backed digital asset pegged to USD. Sounds very complex. Basically, what it means is that it's created by users who are borrowing Go against multiple collaterals like ETH at a rate of currently around 3%. So you are depositing your ETH, you're borrowing Go against that, paying 3% to do that. And this process is what mints Go, what mints that stablecoin. And when you repay that Go borrow position, the protocol burns that user's Go, that stablecoin gets burned, and all of the interest payments that have been accrued by that, so that's the borrow rate that you as a Go minter, quote unquote, have been paying, would then be directly transferred to the Aave DAO treasury. Let's look at some of the stats to see how big this is, how the collateralization looks like. We currently have a market cap of 160 mil, so it's definitely not the biggest stable coin, with a collateralization of 245%. So definitely an over collateralization there. And that is also going to be important because Go, and I'm going to get into that a bit later, has struggled for a while to maintain its peg, and something changed so that this situation basically got fixed. But let's first take a look into the staking side, into the yield farming side of things. Currently, if you're staking Go on Aave, you can earn a yield between 15 to 16%. That yield basically comes from two components. There's the base staking APR that you're earning, which currently is 4.5%. And then the majority, 11.5% currently, comes from what is called the Merit Incentive Program. That's a program that is governed by the Aave DAO, and it's basically there to align user incentives and behavior with what Aave thinks is necessary to stay competitive. And obviously, they want users to stake their Go. And why is that the case? That's something I want to touch on when I take a look in where the yield is coming from, how the risk side is working. And to do that, we need to go back in time a bit to when Go launched, again, July 2023. They lost the peg. They traded around 97 to 99 cents from July 2023 to end of January 2024, when they managed to regain the peg. And also back then, Blue Chip, that stablecoin rating agency, did a rating in August 2023, basically gave it a D grade, said, look, governance, everything, security is looking good, but you have a major issue with stability. There is just not enough of protection for the token to actually keep its peg. And this is going to be a major issue. Blue Chip actually never updated the report. It still says that Go won't ever regain its peg. They were definitely wrong about that. Go did regain its peg, and what they did to do that is that stablecoin has been added to what Aave is calling its safety module. And the safety module is exactly that, where you're staking your Go to earn the yield. And the safety module is there in case something catastrophic happens on Aave. So if a shortfall event happens, that is a smart contract exploit, that is any other type of exploit, a compromised oracle, or anything that would lead to a situation where the liquidity providers would massively lose out on their stakes, and the shortfall event is determined by the Aave DAO, then the Go stake would be slashed. That basically would mean, say there's 100 million Go staked, and the liquidity providers have lost out because of an exploit on 20 mil, and everyone's stake would, in simplified terms, get slashed, get reduced by 20% to repay and make the liquidity providers whole. And that's exactly why you're earning yield on that. So you're basically, as a Go staker, taking the risk that if anything goes south with the Aave protocol, you are the one who will have to pay that. You will be the one who is losing part of his stake, or in the worst case, even your entire stake, to earn the yield. And obviously, because those 4% are not competitive enough, we've seen PYUSD, we've seen other stablecoins having incentivized farming. Aave also added that merit program, where the other side of the yield, where the additional 11.5% are coming from. So to sum it up, in return for taking this risk as a staker to have your funds potentially slashed in the case of a shortfall of a catastrophic event, you're currently earning an incentivized yield between 15 to 16%. B, I know you're more like on the passive yield farming side of things, don't have too much time to farm airdrops actively right now. Is this something you have been playing around with? Is this something you have been looking into?
Yeah, I like it. I like that. I thought it was an excellent summary in terms of the risks. I don't think I understood those fully. I was aware of some of them, so that's super helpful. I am actually playing around with this one in particular, though, because um, I think Aave is a great brand, first and foremost. I think they've been one of the battle-tested protocols of our time. So I wanted to get involved in the protocol, and as a way of doing this, what I did specifically is I started supplying some of my ETH, and then I borrowed Go against my ETH at a rate of around a few percent. I can't remember the exact rate that I'm borrowing, but then I'm staking the Go and earning like 15, 16%. So I'm earning money just from essentially holding ETH, because the Go comes from me holding the ETH because I'm borrowing against the ETH. And then the rate that I'm earning on the Go is higher than obviously my borrow rate, but it's also higher than if I just staked ETH by itself. So therefore, this is, you know, something which is over and above what I would have been able to earn by basically doing nothing if I even just staked the ETH. And that's really the comparison point here, right? Isn't you need to be outperforming just staking the ETH. That's like the baseline performance that you need to be. Of course, there's other more risky things you could do. So I really liked it just from that perspective. I also wanted to play around with Aave as they're a fantastic brand, and I think I just wanted to play around with the platform more. So that's why I've got involved. What are your kind of concluding thoughts on it? Is that would you are you doing something similar? Would you do something else with it? Would you just buy it straight up? What's your thinking?
Yeah, no, very good question. So just to add that extra color to your borrowing rate, that should be around 3% right now. So if you're earning 15.5%, you pay a 3% borrow rate. Basically, your ETH is earning 12.5%, which is more than double what typical staking would currently get you. I am happy to touch Go now that basically since the start of the year, this situation found a remedy with adding Go to the safety module. Because again, before that, you just had the situation that there was no incentive for Go to ever regain its peg. And that's an important addition. So with that, I feel comfortable to do it. I probably still wouldn't throw my entire stake into it. Obviously, Aave has upgraded the contracts multiple times. We're on Aave V3 now, but you still could have some sort of catastrophic event
Sure.
happening there. And it's a relatively small stable coin at 160 mil. But I think it's pretty easy to understand what's going on there. So it's like a more calculated risk. If you look at something like Ethena, which is a very interesting product, I would definitely argue it's way more complex to understand what Ethena is doing than that simple strategy of deposit your ETH if you want to mint the Go yourself, borrow Go against that stake and farm like a net yield of 12.5%.
I like it. Okay. I think that's a really helpful summary. Hope that is interesting to people. We're going to keep trying to dive in and find these interesting DeFi slash kind of lower risk strategies, which are not just throw all your money into meme coins, and hopefully be able to outperform either treasury rates, ETH staking, those kind of more risk off strategies. Not without risk, of course, but an interesting opportunity. So hope that was helpful. Shout out to Swipe, the Tinder of prediction markets, for sponsoring that segment. Let's keep moving and get into one of our headlines for today. This Xcopy sale is really fantastic. And I've got a bunch of interesting information about it, which you might have missed if you are not really in tune with the Xcopy market and the Xcopy collectors and the whole Doom DAO, who are really doing big things when it comes to acquiring and cornering the Xcopy market in some way. So this Xcopy chatbot and chill sold for 800 ETH. That's $1.9 million. It was minted, thanks to Benji for sharing this information, because I didn't know all of this. I'm showing this on the screen as well if you're watching in. It was minted on the 14th of December 2018, making it the third last work to be minted by Xcopy in 2018. This is a pretty cool statistic. The seller Momus acquired the work in January 2019 for 0.75 ETH directly from Xcopy and held it all the way through to the sale. I love hearing stories of these things where you have these absolutely diamond-handed collectors who truly, they've sat through all of the previous bull market, nothing fazed them. They just genuinely like the work. And it seems like in this case, they just got an offer that they absolutely could not refuse, because I'll explain who the buyer and the seller was in a moment. Just a bit more context. The classic work is only one of only 49 one-of-ones that were minted in 2018, the most desirable minting year of all Xcopy works for both editions and one-of-ones. This is a 8888 Benji talking, who is also a very big collector themselves. They said the price paid is the highest for any Xcopy work since December 2021, demonstrating both the rarity and the high regard that collectors have for one-on-ones of the 2021 era. This was some additional context from the Doom DAO, which, if you're not familiar, the Doom DAO is kind of formed in order to, I don't know exactly what their mandate is, but I do know a couple of people in there, basically to steward Xcopy and be great supporters of, great patrons of, just make sure that Xcopy's work is celebrated in the way that it should be, that it's in the hands of the right people, that type of thing. So they actually tweeted to say, our member Punk4945, who's been on a crazy spree, and I've got his collection to share in a second as well, has acquired Chatbot and Chill artwork from the Momus Collective, who is also a member, for 1.9 million. So this was an inside deal, in the sense that these were two members inside of the Doom DAO. This is another early work from Xcopy's Time Machine, referencing the AI future we've recently entered. When you look at what Punk4945 had to say on it, I think pretty delighted with the purchase, but maybe the more interesting thing I noticed on his timeline recently was his collection, which he shared. I'm trying to zoom in here, because if you look at the collection, it's just ridiculous. Like, if I click here, let's see if it can go any further in. We've just got like multiple Xcopy grails. Can I zoom more? I'm trying to zoom in more, guys, but here we go. We're getting slightly closer. So we've got, if you can't see this because you're not watching it, I'll just read out some of the pieces of work. All kinds of Xcopies across the board, loads of known origin editions. We've got an edition of the Doomed. We've got a Grifter. We've got Hello Admin, which is a famous edition. At least 10 editions here, more than 10. Also, the most iconic editions, in my opinion, you've got Slave, the one with the red background, the third one that you can see with the black hand coming out, which is a huge one. And then you've also got The Last Selfie. The Last Selfie is a really, really iconic one. I'm pretty sure that has sold for, if not 6 figures, then 7 relatively recently as well. So outrageous collection going, and another one being added by Punk4945. I thought it'd be interesting because understanding, I've been reading a lot on how the previous kind of art barons and kingmakers kind of make markets, and what type of things need to be done in order to make certain things valuable. And I think the Doom DAO is doing a fantastic job in creating this atmosphere and aura and group around the work, and on some level even like controlling the supply a little bit. In both examples of the podcasts I've listened to about the former art titans of the world, they've been pretty big on supply. I know in this universe now we're kind of getting a bit more relaxed in that respect, but they were very, very big on controlling supply. So I think this kind of management and stewarding is pretty smart. So I hope that was a little bit of interesting background. Legendary, any reflections there? Any thoughts on having like that DAO that's going to be looking out for you as an artist?
Yeah, it's extremely interesting because it kind of shows a bit more of what goes into the success of an artist. And obviously those artist collector relationships are super important, and even create a bond, create something like that where a DAO like DoomDAO is even interested to basically proliferate that, to work on the Xcopy aura and be a bit of the market maker and a bit of the supply controller. It's very, very interesting to get a glimpse into that.
Very interesting. And also shout out to MDAC in the comments, a member of the Doom DAO, one of the ones who I was just speaking about a moment ago, said 495 has also been unlocking capital using Gondi, our NFT lending partner. That's pretty interesting to find out. He says last selfie and mortal are on Gondi right now. So unlocking that capital from these grails. Remember Gondi, who is our NFT lending partner this season, have been like over and over again securing humongous loans for some of these real grail assets. So interesting to know that that's maybe part of the strategy as well when holding these top assets, something that you can't necessarily traditional art world as quickly, at least. Interesting stuff. Legendary. Let's get into the next headline. I hope that was helpful on the Xcopy stuff. Where are we going next? I think you're going into some crypto payments stuff.
Exactly, into the Stripe headline. Let's do it. So as you said before, I think you froze for a bit, but I think you're back now. Anyhow, let's get into the Stripe headline.
Maybe it was me. I thought it was you, but yeah.
All right, let's do it. So Stripe is accepting stablecoin payments again. They did that in the past. They did that 10 years ago, but now accepting it again. Before we get into the actual details of that, why is it even important? And let's take a look at some of the statistics around Stripe. They have surpassed $1 trillion in TPV, that's total payment volume in 2023. 10 years faster, actually, than PayPal did that. PayPal took 23 years to achieve that milestone. Stripe did it in 13 years. Merchants in more than 50 countries. The company's valued at $65 billion because their market share globally for payment processing is 21%, making them the second most used payment solution in the whole world. And over 4 million websites also have used Stripe to accept payments. They've raised almost 10 billion from 56 investors up to date. And in terms of employees, just because we always do the tether figure, and to get a feeling of that, Stripe is employing 7,000 people, so definitely a fair bit more than Tether. And again, creating an insane amount of volume, surpassing that 1 trillion mark as of last year. And Jeff Weinstein, who is responsible for product at Stripe, had this post out, which I'm sharing on screen, saying, okay, crypto on Stripe is officially back, accepting stablecoins from 150 plus countries. The way it works is the buyer is paying in USDC, either on ETH, Solana, on Polygon, and you as the business, as the USA business in this case, are receiving dollars. Works with checkout, works with elements, payment intents, and will soon also work with subscriptions. And they have announced this back in April, 25th of April, that they want to roll out in summer. And again, today, maybe a couple months later, it's not summer anymore. They did manage to do the rollout and get that implementation live.
Love it. I think it's we keep saying this over and over again. It's such a clear and obvious theme that many people are writing about, who I think are smart. The stablecoin adoption is just going through the roof. So I think we can very confidently say that that number, the stablecoin number, the on-chain dollar number, is just going up. And so thinking about what the consequences of that and the second order effects of that, I think are really important for how, you know, it was very wise to think about as you consider how to place like your next set of bets as we move into not just 2025, frankly, but just onwards into the next decades, because that seems to be the very clear and obvious trend. This is another example of that. We've got one final headline to get through today, but let's hit the Web3 Roundup to get you up to speed with everything else that's happened in the space in the last 24 hours. Got some interesting, kind of explosive stuff going on as well. Number one, Trump's World Liberty Financial posts governance proposal to Aave. We're talking about Aave being the top battle-tested protocol. Could be hosting Trump's World Liberty Financial because they're going to be launching an Aave v3 instance. E3 staking platform and L2 Swell announces its airdrop checker. If you were participating in that, you can go to their website and check if you are eligible. Delta announces a $11 million raise to build a network of networks with shared state. To be perfectly honest with you, I don't know exactly what that means, but I hope to find out. Shape's first meme coin hits a $15 million market cap in just a few hours and was recognized by Beeple and Bold Leonidas. I think it might be down to maybe 11 or 12 million from what I've seen on the timeline at the moment. It's definitely dipped since then. I bought a little bit this morning when I woke up because I thought it was kind of fun, but no idea where that's going. Seems to have got some traction pretty quickly though. So that is that to note. Reccoin tweets image of Rec Guy and rewards document sending Rec Guys up 46% to 0.73 ETH. That was the biggest gainer on the NFT side. Clear indications towards coin with the name Rect Coin. So unsurprising movement there. Optimism airdrop number 5 is announced as well. So if you've been participating on any of the super chain, you might be able to have a bit of an allocation. And then finally, on the more creator side, which I think is always relevant to us, X announces creators on X will be paid based on engagement with their content from premium users. So it seems to be the case that they want to incentivize users' interactions with other premium users. Maybe trying to focus more on a subscription model and maybe throwing out the advertising model a little bit, because I think they found it a bit challenging to maintain and keep up their advertising revenue. So that's the Web3 Roundup, Legendary. Let's get into our final headline for today, this VanEck fund, which I think is very, very interesting.
Absolutely, let's do it. VanEck had a post out on X saying, let's be honest, crypto is at crossroads. There's the obsession with infrastructure investments, which we just touched on at the start of the show in the discussion point, and token launches. That has created an imbalance that is taking away attention from products that actually deliver real value to users. And they basically want to find an answer to that. And their answer is VanEck Ventures, which is a $30 million early stage fund, which is committed to invest in visionary founders at that intersection of fintech, crypto, artificial intelligence. And they go to speak a bit more on how they already launched liquid token funds, ETFs, ETPs, but that this fund is for them strategically very, very important step, with the investment philosophy being that they are infrastructure agnostic and they are more focused on the application layer. They're more focused on something that is delivering value to the user and don't want to play the same infrastructure game with this fund. Also named the 2 GPs, the 2 general partners of the fund, being Wyatt Lonergan and Juan Lopez, both of them formerly of Circle Ventures, where not only are they basically have they invested in over 100 early stage companies, but also have worked together, obviously, with everything that's built on top of Circle and using USDC, URC, and the Circle stablecoins. Wyatt also had made a post on that, sharing a bit of his history, that he basically goes back to crypto all the way to 2018. He was working for Seed Invest. His experience there led him to Circle, which back then the company he was working at was also acquired by Circle, led to the creation of USDC, and kind of speaks a bit to his journey and how basically it all led to him joining VanEck and being the GP of this fund. And look, I think I'm going to keep it short in my take because we had that very extensive discussion previously on the show. I think everything that we said on the infrastructure not being basically the simple play forever, and this can't continue. There will have to be a focus on applications, and they will be the revenue and value drivers. And I think that's perfectly in line with what VanEck is trying to achieve with this fund. And hence, I find that super interesting and will be definitely curious to observe what they will be investing in.
Just on that point, a little bit of extra information from the press release. They said the fund expects to make 25 to 35 investments with check sizes ranging from $500,000 to $1 million, focusing on companies that offer both strategic and financial upside. The fund has already made 4 investments yet to be announced. So, as you say, will be pretty interesting to see what direction they take this in. I think they're just obviously here to play. They're coming to the table, just like they've probably seen a lot of the funds perform exceptionally well. I think these bigger, more traditional players will want to have their slice of the action. Would love to hear Matthew's thoughts actually in just a second as well before I share some other thoughts. I've actually had, in line with our own creator advice to people yesterday, we spoke about vocalizing things. And for the first time ever, Legendary, remember we said before we would never raise a fund. It can't be bothered. It's like, you don't really want to raise. It's definitely a huge responsibility to raise and then look after people's money. However, for the first time, I have considered it only because of the quality of some of the deals we're seeing now as people in the media. And the reason why that's the case, I think, is when it seems to be the case, at least at the moment, and I don't know how long this goes on for, at least at the moment, it seems like we might be able to access deals at a better position than even VanEck, for example. Like literally, I was speaking to a VC who came into one of the rounds at a particular terms. And the thing is, because some of these teams need marketing specifically, the KOL offer is actually on better terms. And you can get in with like a reasonable amount of size as well. If that was to continue, I would actually, for the first time, be tempted to raise something for ourselves because I feel like again, it's about unfair advantages. Like we would have a distinctly unfair advantage, which we'd be able to offer to other people. I don't know if you have a little reflection on that, Legendary, before we hear from Matthew.
I would add to that there's also companies in the space who distinctively say no to VC rounds. They just don't want to raise from VCs. That's maybe a perspective I personally don't share. I don't share that strong VC criticism / hate that we sometimes see, but it's definitely a different access to deals that some people in our space are getting versus the access to deals that VCs are getting. And also goes the other way around. There's deals that will only be presented in a lucrative way to VCs, where you just won't have access to that as a KOL or as another person. Thinking about EigenLayer and thinking about how some of the early investors got to basically stake their Eigen rewards, claim Eigen, and not having to vest them is a deal that probably wouldn't have gotten to the majority of people or creators on the timeline.
For sure. So I'm just putting that out there. If anyone thinks that that would be an appealing prospect, I'm not saying it's necessarily going to happen, but do let me know. I'm wanting to try to gauge interest. If that's something which is interesting, I would like to know simply that you find it interesting at the moment. Would love to go to Matthew, who himself is involved in a lot of asset management on the state side. Matthew, welcome to the stage, my friend. Great to have you with us. What are your thoughts on VanEck getting into the mix here with this $30 million fund for early stage startups?
Good morning, everybody. Sorry if I'm driving, so I hope you can hear me. But I love to see that VanEck getting into this. I think that's really important, like you talked about from the applications perspective, and what you touched on earlier, B, about Facebook and not really, how could you pick a Facebook out? How could you get equity or investment in a Facebook when you wouldn't really be able to have the ability to invest in the internet? And that's what's crazy, is that the L1s are really just the ability to invest in the infrastructure, as we've talked about, and that has never been possible before. So now we have all the applications that are sprucing up, and we need to have all the abilities from a VC perspective to kind of take that power law into effect. How can we spread a bunch of different bets out and see which ones are going to pop? And I love that VanEck has taken the approach, a little bit, 500K, $1 million here, $1 million there. I think that's a really good number for them to be looking at it. And it's a good size fund. So would really hope that all that goes well. And if you ever need fund management, I know we're going to be chatting about stuff in the future, but I think you guys would just be killer GPs, and you've got a lot of interesting value that you can add to the organizations that you would potentially be investing in. So awesome. Congrats.
Appreciate it, Matthew. Actually, I really like that take. The idea. I don't think I'd ever really thought about it like that. Like in a way, the L1s is just like literally like level one. It's the facilitation. It's the ground level being built, the foundation on top of which now we can start investing in all of the other stuff. And now maybe the real stuff happens. Up until now, the real stuff has just been building different foundations over and over again. And now we get the chance to get into the apps. I like that kind of imagery as a way to helpfully frame this this conversation. Appreciate that, Matthew. Legendary. Any final takes before we close out the show? Almost done.
Yeah, in terms of vocalizing the things we want, definitely would love to get someone from VanEck on the show to talk more about their fund as well.
Yes, let's get someone from VanEck immediately. If anyone knows anyone, do let us know. That is going to happen. So stay tuned for that, whether that's tomorrow, the next week, or the week after. Remember, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X, X video, YouTube video, Spotify, and Apple Podcasts. Have a wonderful day, guys. Thank you so much for joining us. Thanks to Legendary, who has been fantastic co-host as always. Have a wonderful day. Take care, and we will see you again tomorrow. Bye-bye.